Hello and welcome to the CNBC TV18 special from the CNBC TV18 Motilal Oswal studios. As markets continue to remain under pressure, the question most asked nowadays is, are we there yet? Are we at the bottom or close to this sell-off ending? And the sell-off has been quite painful. While the Nifty has lost about 16% in value from all-time highs, the small cap and the mid-cap indices have lost 25% and 21% respectively. While the market peaked in late September last year, the real vicious turn in sentiment firmly to the downside is only about 45 to 60 days old. Is it just a plain vanilla correction after a few years of absolutely go-go fantastic markets, or is there some deeper underlying malaise at play here?
And to help us with answers, we have with us in the studio Raamdeo Agrawal, who will be our guest editor for the hour. The other area, with Trump hinting at tariffs on pharma, how is the sector placed? We will be joined by Lupin's Ramesh Swaminathan to discuss all this.
Well, let's get the ball rolling then. Raamdeo ji, welcome to the show. Thank you very much. And always good to see you. Reassuring, and I think to our viewers as well, right? Who always see you as someone who has seen lots of markets, lots of cycles, and I mean, they learn from you. मुझे याद है हम 2 हफ्ते पहले हमारी बात हुई थी, आप बोल रहे थे जब पार्टी चलती है तो चलती रहती है, जब बंद हो जाती है then it is to restart it becomes very difficult. टाइम लगता है. So अभी कब कितनी देर बंद रहेगी पार्टी और पेन कितना है यहाँ पे?
या प्रशांत, ये थोड़ा unusual टाइम है. हर समय every time it is a new story. That's the beauty of the market. Like 92 was the first shocker we had. First there was a upward move of 7x in 19 months. And then collapse, vertical collapse from 4,200 to 24, 2,500. And the market started moving from 700 to 4,200. Unprecedented in 19 months. So stories are always different. It was not backed up by earnings. It was just some kind of liquidity flow. 2000, Y2K boom. It was sectoral move, big time, Again it crashed by 50-60%. 2008 was again GFC crisis, the same. 2003, 2008 build up and then crash. And every time the earnings are broken. This time the market has moved from 500 rupees EPS to 1000 rupees EPS for Nifty. And market extended from say 8,000 at the bottom to 24, 25,000. So it went 3x. Earnings went double. So obviously market got re-rated big time. Now we are correcting that re-rating because earnings profile is slowed down, but it is not broken. I mean, last year, the current year, the earnings are going to grow at about 5-6%. And there is obvious reason for credit slowdown, economic slowdown. Every aspect of tightening by the regulators have happened. And now, and there was the election, so there's a delay in the government expenditure and all. So all of this have passed. I mean, this is the year of actually all kinds of difficulties, I would say, in economy. And despite that, we are doing 6.5%. Don't forget that, And now we are exiting probably March quarter with closer to maybe 7.5%, 8%. Let's see what comes. So I think we have set the mood. One, correction is done. The P multiple, which was at 23, 24, that has come down to less than 20. And it is at below 10 years average. So nothing stops at the average. It overshoots a little bit. So that is what is on now. If market corrects further from here, it is overshooting downside. Okay. So that's what we are in right now. How long it is? See, as you said, the all-time high was in September. It is not even 6 months that market is correcting. So after 4 years of relentless rally, if we are there for 6 months out here, last year we made 50% in the market, broad market I'm saying, and we have lost say 20-25%. So I think it is painful. I understand it is painful to me also, but it is very, very logical. I mean, it's a proper healthy correction. If indices in small and mid had gone up by say 70-80%, they have fallen by 25-30%. And whose portfolio has done 70-80%, they've also fallen by 35-40%. So excesses in the market was very clearly visible. And regulator, government, worldwide investors, everybody was uncomfortable. So this is a very healthy correction. And now next year, earnings will pick up from 1,050 to maybe 1,150 or 1,200, whatever. And your IPO markets are now shut, almost like frozen. So one by one, right things are happening. Credit flow is improving. Government expenditure is picking up. So I think all the things are falling in place and correction has also happened.
So just to complete that point, Nifty, anything more now is overshooting on the downside.
That is my
Valuation
feel.
wise.
I mean, I'm just looking at the averages.
What about-
I don't look at the forward, nobody knows. We look at the last 10
Last
years.
10 years.
Last 10 years, average is about 20, 21, 20, half P multiple. Now it is sub 20. So yes, can it go another percent, another
Absolutely.
one? It can. Overshooting can happen, yeah.
What about mid and small caps? Because there, Gautam Dugar from your team was with us, I think the previous Monday, and he was telling us mid caps trade at a certain discount to Nifty, small cap index discount to Nifty, and I mean, there the gaps. These are
too much.
numbers as of last Friday,
So,
last Monday.
Yes.
Yeah.
So, you know, if you see today, in your money control, you can go and see 5-year, index performance. So, index performance for Nifty is about 95, 96% up on a 5-year basis. On same 5-year basis, mid cap is up 177, 180%. So, the gap is too much. If it was at about 100, 110, that I understand. So, that excess gain, either large cap has to catch up to match mid cap, or mid cap has to keep correcting, time-wise or actual downfall. So, I think the divergence between mid and small is too high. Let's see how the market does. Maybe mid will keep correcting and large will make a move, or large will make a move but mid will stay there, and then it will catch up. So, market does its own stuff. I think most important thing is now, don't wait for because we are closer to the bottom. Now, whether it is 1,000 points away, 500 points, I have no idea. And let me tell you, nobody has any idea.
Yeah.
Okay. I have seen best of the chartists and all telling me, they're all eating their own stuff. So what I'm saying is, now this is a time, stocks are making bottoms. All the stocks will not make bottoms on the same day. Okay. So if you like certain stock, and that stock is available at your dreamy price, and it has gone below that, don't hesitate, start moving into the market. That would be my suggestion.
We'll bring in Mr. Ramesh Swaminathan, Executive Director, Global CFO and Head of Corporate Affairs at Lupin. So pharma is another one of those spaces where Raamdeo has had lots of interest over the years, and it's a very interesting space as well. Go on.
Yeah.
Ramesh is with us.
Yeah. Ramesh, hi.
How are you doing?
Yeah. So, you know, one of the things which is your sector is has come back, and you guys are doing very well in terms of margins, exports and everything. And then suddenly this bolt from the blue is coming, where at least the authorities they're talking about tariffs of 25% or whatever. I don't know what numbers are going to go through, but what I heard is about 25% kind of import duty for whatever is being exported called pharmaceutical to US. So how do you react to this thing, and does it have any legs? I mean, is it going to be renegotiated to lower levels, or will it create actually confusion to start with?
Let me begin with, in fact, the economics of the situation. 50% of, in fact, the generics for America go from India, and they actually import 70% of their generics, so to speak. The value of this is about $13 billion. And the economic value of this is close to about $408 billion. It's all about access to medicine, and this makes medicine accessible to the poorer sections of the American society, so to speak. The actual imports of medicines from America is supposed to be about $800 million. About $400 million is without tariffs, so to speak. When this is all about access to medicines, would he be in a position to actually jeopardize his own situation? Because if you raise tariffs, obviously it is going to mean that it's going to be more expensive to a large section of his population itself. I could actually look at 5 scenarios. There's a lot of talk, but nothing really happens, which could be scenario A. There could be a second scenario in terms of equalization. So as I just said, about 50% of the imports from America, which is about 800 millions, is really without tariffs, whilst the balance carries a 10% tariff. And it's quite possible that India could bring it down. And to that extent, even if there is an equalization levy, it doesn't actually mean anything at all because it comes down to zero. The third situation where he actually, talks about incentives to manufacture in America itself, and this potentially could be a long-term story, but as regimes last 4 years, so I don't know whether people would potentially look at actually setting up shop out there. And even if they do, one would like to be reminded that the cost of manufacturing in America is not going to be cheap. I know as a matter of experience that what costs about, say, about $6, $5 per 1,000 tablets could potentially cost about $35 to $40 out there, 8x in terms of manufacturing cost, conversion cost. And that's something which has to be, it's not easy for them to kind of digest something like that. And lastly, if you talk about import tariffs, from my perspective, I would say that this would actually be passed on to the consumer. And lastly, if it is not passed on, it really is going to be specific to individual molecules, then potentially there would be a situation where some part of it has to be absorbed, some part has to be passed on. But there are far too many moving parts, as you can very well imagine. I would also add that this industry, it caters to the rest of the world as well. And America is not necessarily the El Dorado that it was some time ago. So a lot of companies are kind of diversified also. So from a sector perspective, whilst it is, of course, disturbing news, it's something that we need to contend with.
Yeah. But Ramesh, does it mean because of all this confusion and uncertainty as a capitalist, would you stop your growth investment for these markets? I mean, earlier everybody was trying to get US FDA and set up the bigger and better and the, at faster speed the plants. Would that take a break?
There are two parts to this. America still remains the biggest market from a pharmaceuticals perspective. And certainly, it's a nuanced strategy that we follow. So we have, over time come down in terms of, and the industry, I'm talking about the industry itself, not necessarily Lupin, come down our exposure on more commoditized generics and so on, and focusing on the value-added ones. That will certainly continue because it's certainly very lucrative from our perspective and from the industry perspective itself. These temporary blips will certainly continue, but I see a long-term future which is pretty, pretty rosy and pretty interesting, alluring from a pharma perspective.
Mm-hmm. So you are saying that the business remains as usual and growth prospects. See, because when you buy stocks at 30, 40 P multiple, I mean, your sector is one of the most coveted sectors, which has created fantastic value, including Lupin itself in the last 15, 20 years. So they have been very highly valued at about 30, 40 P multiple. So do you think, and that is linked to the, very clear, unobstructed growth possibility for the companies. Now, is it becoming cloudy in the sense that you may, I don't know in what form the restrictions will come, whether you have to share part of the restrictions, the tariffs, because they're talking about reciprocal tariffs. Now, reciprocal tariff, apart from the pharma and auto, they're talking about reciprocal tariff at a country-to-country level.
Yep.
So I don't know where exactly it settles and when it settles. And after settling this round, whether it will another round, like so long as this Trump, this regime is thinking like this, it never ends. So as a businessman, I would be scared to put up $1 billion out there for the new, whatever capacity is there, that's fine. But the future commitments of $1 billion or something in India or someplace to cater to US market, you'll say, take a walk here, let's go to some other market and don't bother about it. Is it likely to happen like that?
As I said, I think we are, it's not as though we are dependent only on America. So essentially from our perspective and from the industry perspective, India is still a wonderful market, and there are exports to other parts of the globe as well. Though, of course, America remains the most important market, and any tariff change will certainly in some ways impact it. But I think I would say, as I said, I painted out 5 scenarios, and all of these are moving parts. It's difficult to conjecture what really would potentially transpire. From that perspective, I would rather wait and watch. But I would say it's not going to be all gloom and doom because it is really going to be specific to individual molecules. A lot of molecules have, a lot of companies in the recent past have also shed, in fact, certain molecules because they're not so remunerative. As you would know, the number of drug shortages in America, the number of drugs that are in short supply have hit an all-time high. It's close to about 395, 400, only because the fact that a lot of companies have actually in recent times shed their portfolio for America. So if indeed it comes to a situation, and if they find it unviable, they will, of course, not export, but they would, of course, kind of work on more complex ones where there is going to be less potential of competition from America or any other part of the globe and so on. And that's reworking on their own strategies for more complex stuff and moving on to specialty and the like. But clearly, I think the investment mode is certainly going to be on. And the long term certainly does look pretty alluring.
Are you likely to shift the portion which is the generics which are made in US for US? Right now, I don't know what percentage of the total generics sale of Lupin in US is manufactured in US and how much of it is manufactured in India?
As I was just telling you, we do have manufacturing facilities in America, and of course, a larger chunk of it actually comes from India. The paradigm always has been low-cost manufacturing in India, low-cost R&D in India, and of course, exporting from out here. But we do have factories out there as well. But out of experience, I'm also telling you that the cost of manufacture in America is multifold in terms of cost vis-a-vis an Indian scenario. And from that perspective, manufacturing in America for the long term does not really make sense. But again, it has to be a nuanced strategy where, for example, we still have a facility in America for, in fact, the respiratory portfolio and the like. So it has to be really nuanced to, in fact, the therapy that you're speaking about, the product that you're speaking about, and the like.
Okay. Would you have the number, Ramesh? What percent, or as Raamdeo asked, what percentage of what you sell in the US is made in the US?
Oh, as from our perspective, about I would say, we export close to $1 billion from India, and what we actually manufacture in America is perhaps about about 8 to 9% of that.
Do you think, Ramesh, because Raamdeo, they've invoked with pharmaceutical products, drugs, etc., they've invoked the national security angle as well. It's not just about tariffs. It's not about raising revenue. They're saying, well, these are critical things. We want them made in America. But as Ramesh said, this is 4 years. What happens after 4 years? If the policy changes, you invest all of that.
Yeah, so that brings that's what I said. See, economics are clearly in favor of being made in developing countries like India or some other place. But the issue is that currently the confusion which comes in the minds of the larger companies or investment cycle, so that slows down. And that slows down the earnings profile of the companies whenever you slow down the investment cycle. So that was my question. Otherwise, the economics of these businesses are fantastic.
Ramesh, the other thing is, while we're talking about tariffs and Make in America, etc., with pharma, the administration seems to be looking at everything at a very base fundamental level in terms of how things are done, what can be changed. What about licensing of drugs going off patent, those kind of things which have been working pretty well, right? Authorized generics. You think we've got the health secretary in the US who's also considered a pretty, he wants to do a lot of things which will, if he's allowed to, it will disrupt things. Do you think those will come under scrutiny at all? I've not heard or read anything of that sort yet. Any thoughts?
Absolutely. From my perspective, neither have I heard about, in fact, other elements of, in fact, their overall strategy. They do talk about, in fact, incentives for manufacturing in America. That's a nationalistic fervor seems to be running across several countries also. So that possibly is picking up momentum out there in some ways. But it, of course, to be nuanced with, in fact, the complexities of that market itself, where 70% of it is actually being imported today. And the cost of manufacture is going to be pretty high. So far too many moving parts to comment. So we'll have to wait and see how it actually emerges.
Ramesh, just a quick question. In one of the scenarios, in the case of tariffs being imposed, you said the company will have to bear part of it and part of it will be passed on. What could be the extent that Lupin will have to bear?
No, I don't think it can't be specific to, as I said, it's really going to be dependent on a particular molecule, okay? And if we find that a particular molecule is not remunerative enough, we've actually not, we have never stymied away from, we've never been stymied from actually dropping that particular product from our portfolio. So that portfolio adjustment will certainly take place. And as you can see, there are close to about 395 molecules in short supply in America because a lot of companies have professed exactly that.
Raamdeo, from a stock perspective now, just to wrap this up,
So,
just as Ramesh said, you can't make investment decisions based on 4-year administrations, right? You'll have to take a longer-term view in that sense. Similarly, you can't make investment decisions based on at least long-term investment decisions. So I've heard some say, well, look at India-focused companies now. US generic companies, perhaps they'll go through
this sector is, this one and tech, both are extremely, kind of export focused. These are two backbone of the Indian exports.
Correct.
So you cannot, the prospects of these companies are heavily dependent on what happens to the US exports or even non-US exports. So non-US exports are still fine, but US is the core where profitability is also very high. And Lupin has been particularly very successful in what you call exporting to US with the complex generics and a whole lot of things they do. So, I mean, I think finally the logic will prevail. But right now, the confusion I see, so my sense is the boardrooms will definitely behave differently. I mean, they will slow down till the clarity comes. Maybe the clarity will come in a month or 2 months' time.
Slow down investments and
Yeah, I mean, if you're pushing for a next expansion of your injectables or something by 200, 300%, seeing the market,
I see.
think you will,
that you will kind of
yeah, I mean, that's
go slow. And
I
then
mean, I don't know. I've not sat in any of these boards.
Yeah.
From outside, I would think that boards will develop a cold feet, you know.
Well, it's a wrap from Reema, me, everyone on the team who put this show together. Thank you very much for watching. But regular programming resumes in just a bit after this quick commercial break.